that. Okay, if you focus on just simply trade, then it's unambiguous. The winner of the prize is income growth. That's what's doing most of the work in accounting for the trade boom. In no matter what period you care to look at, you'll always get that result. Remember the 62% rule. It's always going to be the biggie. And that's not 62%, but it's close. Well, you know, it's true, but it still leaves a lot to be explained, right? I mean, it turns out that income growth may be the key, but that still leaves a lot of other stuff to be dealt with as a residual. So suppose instead your focus is on trade shares, then income growth drops on the list. And barriers to trade really become important in the story. So, for example, for the period 1870 to 1913, the main explanations for the big increase in that trade share, world trade share, is being on the gold standard, fixed exchange rate with no exchange risk. Traders love that. It reduces risk in the trade. And falling transportation costs. That's doing all the work over that period. As it turns out, that statement holds with a vengeance when you're looking at Europe and their offshoots. When you start looking at Asia and Latin America, it doesn't quite hold as much strength because countries that are autonomous, like the Latin American countries, choose not to be on the gold standard and to control their own currency, thank you very much. And so you have somewhat of a different story in that case. Okay, so finally, if your focus is on world market integration, which is what I was trying to persuade you is worthy of our attention, then it's trade costs doing all the work completely in the story. Okay, what am I saying here? I don't know. What are we saying here? Yes, that's different. Sure, that's true. Yes, of course. Yes, yes, yes. Okay, goodbye. All right, now let's talk a little. Can somebody tell me what time it is? I can't read it. It's 5:30 already. Okay. We have to quicken the pace a little bit. Remember, I told you at the start we're not going to do financial capital, so anybody interested in that can leave now. I'm not going to do that. We're going to start talking about mass migrations. And talking mainly about Europe, because Europe is the main, going to be the main source, low-wage area, sending out workers to high-wage areas during this episode. And the numbers are really huge by the middle of the 19th century. The out-migrations are really huge, and as a percentage of labor forces in the sending countries, they're really big. They're certainly as big as they are today in maybe not Moldova, but on average, they're certainly up there, and in many cases, quite a bit bigger. Well, it's really surprising because prior to the 1840s, it was trivial. There was no such thing as a mass migration at all. The Spanish migrations or the Iberian migrations to the Americas, these were bureaucrats and, of course, priests and soldiers and all that. There were very few, workers in that move, unless, of course, you were a slave. It was just much too expensive for a peasant to invest in the move. They didn't have the resources to make the move, so they didn't. It's true also of even German migrations prior to the middle of the 19th century. It's even true of British migrations. So there is not much in the way of what we would call mass migration. By mass migration, I mean big numbers and also involving relatively low-skilled individuals who are the ones that are going to improve their positions the most by making the move. Not much of that going on. And then it goes from this trickle to a flood over a period of maybe just 2 decades. I mean, it's really dramatic switch in the whole environment of migration. The U.S. is one of the biggest absorbers of the immigrants coming from Europe, but it wasn't the only one. There was Canada, there was Australia, there was, of course, Brazil, Argentina, and so on. So there are many countries involved, but the U.S. is still about 60% or more of the total. And here's what numbers look like for the U.S. So in 1820s, that's the total number over the decade. 12,000 folks. Pretty trivial. I mean, this is when the U.S. had a population, I'm guessing, 4 or 5 million, something like that. Anybody know that number? Then let's say it's 4 or 5 million. Right. 1830s, it's increased by a factor of 5. 1840s, it's up to 152,000, and so it goes. I mean, look at that. That is spectacular change in the migration environment, just overnight. So it ought to be pretty simple in identifying what happened during those 2, 3, or 4 decades that could just change the whole rules of the game in terms of migration behavior. And whatever we observe that happens during that episode that opens the floodgates to migration, because none of the high-wage receiving countries, of course, have any barriers to migration, or not much. That's a more modern phenomenon that comes in the 1920s. So during this episode, it's free in the sense that you want to move, you can move, no problem. Only problem on you is getting the resources to make the move. Well, there are dramatic things happening during this period, and what we're looking for are morals that we can bring into the 20th and the 21st century. Got to be the same economic and demographic forces at work, accounting for this big change in regime and the ones we have observed since the 1950s. Got to be the same forces at work. Okay, I said that. I said that. Yes, yes. All the numbers are big. Yes, yes, yes. Not only is there a change in the numbers, massive change in the numbers of out-migrants leaving poor Europe and going to the rich New World, but there's a change in the mix of migrants. Migrants, as you know, are selected by certain conditions. And you can see the selection working here big time. I'll show you in a moment. But first, big change is in the 1820s, only 1/5 of the immigrants to the U.S. were free. 4/5 were slaves or indentured servants. That's pretty late in the game, 1820s, being that big. And by the 1840s, it was up to 4/5. It's all of a sudden, just over 2 decades, it switches from main immigrants are coerced. 2 decades later, main immigrants are free. Big change in the mix in that dimension. And the same thing's true of Australia, only there the stories about convicts. Second, there's a big change in the occupation mix of the immigrants, at least as we can measure them for the U.S. It took so long, the voyage took so long, so there's the opportunity cost. You know, all that time you could have been working, but you're not. You're just sitting on this boat. Not only that, you have to sit in Hamburg and wait for the boat, and you don't know when the boat's going to come and take you. So you lose a lot of wages during that waiting time. And then you have to buy the steerage as well. And then when you're there in New York, you have to search for the job, so there's the cost of the job search, adding up to a lot of money for a poor person. So you know there's going to be selectivity going on prior to the 20s, and it's only going to be the landed elite aren't going to move. Just for Tocqueville is going to go and write books, but they're not going to move. Things are too good in England. Why would you want to go to primitive U.S., even if the real wages were high? No, it's going to suck all the ones in kind of middle class. That's the ones that are going to grabbed during that period. We have the resources to make the move and might gain by investing in land and all that stuff at the frontier. Two generations later, the story is completely different. It's now unskilled labor that dominates the move. So here's some evidence for the U.S. And if you add up servants, these would be indentured servants, and just unskilled laborers. In the 20s, it accounted for 16% of the U.S. immigrants. And we skip over to the 30s and early 40s. The number is now 43%. It's a very short time period, a total change in the mix, and it keeps going. So it's 60% when you get father in the century. So a big change in the mix of immigrants that's taking place. Why? Why is that going on? Well, you might say, well, demand conditions changed in the U.S. Prior to the 1820s, they didn't demand unskilled labor. They demand skilled labor. And all of a sudden, things switched. That's not going to work.